are all the panelists here? They are? Brilliant. Okay, so the next panel is Attracting Climate Investment into Agriculture. Our moderator is Kazuhiro Numasawa, who's the Manager for Agriculture and Finance and Infrastructure Development at the African Development Bank. So may I ask you to come up on the stage with your panelists and then introduce yourself and them. Thank you so much. If you have questions, once again, you can ask with 10 minutes before the end of the panel. There will be a roving mic. If you could just say your name and company. Thank you.
Is it working now, or do I need to switch on or switch off? No, we don't need to. Already on, right? Yeah. It's green, so it should be okay. Finishing. Yeah. Okay. Great. Okay, good afternoon, everyone. Thanks for joining us, this exciting panel. Going to talk about AGRITECH. Of course, we have a great representations from a startup, from investor, and also DFI all together here. Of course, pleased to meet everyone, and I'm very excited to hear your each individual panel story, how you actually do the investments in day-to-day. A very dynamic market in Africa, across the continent. There are so many things that we can work together, of course, and I'm sure that you can inspire also the audience how you are tackling some of those challenges in the context of the food security or climate change and all together. And of course, I'm particularly interested to hear from you because of this context, right, in Africa now. Let's say after the COVID-19, there's a food security issue came up. Africa now realizing that we need to produce more produce on the continent itself without relying on, let's say, wheat import from Ukraine and Russia. And then you have seen that a lot of floods or droughts coming up, Horn of Africa or Libya or Nigeria, wherever you go. There's so many the climate impact happening. I'm sure that you also face day to day in your investment. So I also wanted to understand how you are integrating your, let's say, investment criteria analysis in the context of that the dynamic market, in a sense that the food price is going up, or even sometimes raw materials supply is constrained, or also the climate risk associated throughout your value chain, whereby you actually try to invest and maybe try to, of course, materialize your return. Now, let's start, getting a quick introduction of the panel members, and then I can sort of start engaging with you a few questions. So if you allow me, maybe we can start from your side, and then maybe you can just quickly introduce your organization and what you do, and then maybe also your expectation, what you want to get out of this panel.
Sure. Well, I mean, first of all, thanks for the introduction. My name's Hassan. I'm the founder and CEO of ID. We're an Egyptian agri-tech company. We provide a real-time field operating system for commercial farms, plugged in with a bunch of value-added services such as payments and insurance. I think what I hope to do is kind of like try to convey how farmers and growers see the impact of climate change, and what, from our conversations with them, we feel they need in terms of support, assistance, and tools in order to cope with what's happening, because at the end of the day, like you said, they're the ones providing us with the food on the table. So we need to really listen to their voice and act based on what is in their best interest in order to achieve our goals at the end of the day.
Fantastic. I'm very pleased to hear that, entrepreneur like you, Hassan, you actually dynamically engage in the farmers in terms of providing technology, but also the awareness in the context of this climate change, because education or training is key, to even, let's say, nurture the industry. The farmers, sometimes the government see as, sort of a recipient of the support, let's say, subsidized fertilizers or some kind of irrigation schemes and so forth, but actually we are not materializing the potential of the farmers. Farmers themselves are the business people. As long as they have enough information or access to the information, and then some, the tools that you provide, and then farmers can become actually the real business people to actually make things happen on the ground without relying on the government or other, let's say, the grant and resources and so forth. So I'm very happy that now you're representing your tech company, but as well as a farmer. So I'm very glad that we have you on the panel. Thank you so much. And then also next to Hassan, please, of course, you can introduce your organization, and it has been a journey for you also coming to this space, and you also work to so many different companies. So, but now you're working on the impact investment space, and so maybe you can give us a quick snapshot of your journey, and then why you decided to do what you're doing now.
Okay, thank you very much. Thank you very much to all for being able to be here. Well, it has been a long journey, yes. We started with some philanthropy activities, which turned as a foundation when those philanthropy activities grew. That foundation, around 8 or 10 years ago, we set up an investment vehicle to invest, not to do just philanthropy, but to invest. And that investment vehicle turned into an asset manager approved by the Spanish Financial Authority. Then we set up an investment fund focused on sub-Saharan Africa. It's an impact investing fund. And 2 years ago, we set up our second investment fund focused on Spain. So we are now an foundation, an asset manager with 2 impact investment funds. Well, impact investing, we look for 2 things, a positive social return and a positive social impact, 2 at the same time. In the sub-Saharan investment fund, well, our portfolio, if I remember well, it has 12 companies, 12 investees, and most of them, I would say maybe 10 of those 12 investees are agribusiness, agricultural companies, no? And why that? Well, it's because we go to the excluded people, to the bottom of the pyramid. Well, the bottom of the pyramid in those countries usually are in rural areas, and that's called smallholder farmers. So 10 out of 12 investees are agribusiness. And then lastly, what I would like to get out of here, well, it's the same always, to learn from everybody in order to be able to improve in my job and to improve the impact we are having. We would like to have.
Yeah, it's good to hear, in spite of the long journey, you're still looking forward to learn and something, even including also the audience and also the panel members. So this is a really great composition. And I'm very happy to hear that. And of course, I will come back to you more detailed questions and what types of investment that you're doing, etc., from the next round of the questions. And so I wanted to also now get to know, of course, we know each other a little bit, but please do your quick introduction and then what you do and how you're engaging in that agriculture sector in Africa.
Yeah, thank you very much. My name is Deji. I work with Sahel Capital, and Sahel is a private investment firm. And what we do is we invest through two strategies. We have the equity strategy and the credit strategy. And about two funds, in those two directions. We are food and ag focused. We invest across about 13 countries in sub-Saharan Africa, and the focus of our fund has always been how can we make the entire agricultural value chain, more efficient? How can we drive value chain efficiency? How can we drive food security? How can we drive value addition to the work that is happening on ground? So I'm quite excited to be here. More so because, like the earlier speaker was saying, in terms of climate and agriculture, there is a very strong link between both. And we are seeing the impact of that every day across all our portfolio companies. So I think one of the reasons why I want to, one of the things I want to take out from this panel is to put the word out there that there has to be more innovation, in terms of financing agriculture, especially when you think about the climate components, which has both a direct and an implied cost, on the sector.
Yeah, amazing. So of course, the panel members have bring a lot of expertise in the agriculture space and a very good diversification that we have, across this panel members. This is, excellent, the panel. And of course, as you know, COP28 coming, and as you have seen maybe the news article, Kenya and Nairobi hosted Africa Climate Summit, and it was very much successful. And now UN, General Assembly, there's conversation, again, the climate risk, how we're going to mitigate. And so it seems that there are some let's say potential the investments or blended financing may come to Africa, but I want to see the reality on the ground. Let's say when you try to see or sell your projects or investments to mobilize, let's say those climate finance resources potentially, or maybe some technical technologies that can mitigate some of your investments from mitigating the climate risk. It could be like a water efficiency or energy efficiency or some sort of technology that you put in place, the data or monitoring schemes and so forth. But I want to understand your experience and how you are trying to, let's say, leverage the potential. The resources may be available, but I want to hear from you your experience. So maybe we can invite Hassan. I don't know, have you tried mobilize, let's say, climate finance type of resources for your business?
Yeah, definitely. So, if we take a step back and we just put ourselves in the shoes of the grower or the farmer, they think in very basic and realistic terms, which is, I need to reduce my cost and I need to protect or increase my income, right? And so we need to look at climate within that context, where climate affects costs and where climate affects income. And primarily, what we see is that growers are much more adaptable to the more permanent and slower trends in climate change. So for example, soil salinity rising, we see farmers switching crops to more resilient crops or varieties and so on that allows them to continue growing within their own land. And that's not really that big of an issue for them. But where we see really big risks that when they occur, growers can be completely put out of business is with extreme climate events. And these are the type of events where today the only solution that we foresee is crop insurance. And unfortunately, crop insurance in much of Africa is either non-existent or too expensive. And a big reason why that is because there's no data. Insurance companies don't know who the growers are, where they are, what they're growing, what the risks look like. And even if there's an extreme weather event, they don't have any means to measure the impact on the ground to be able to underwrite or to pay out the claims. So we believe that there needs to be a very strong investment in terms of the data infrastructure that exists in agriculture that could then unlock much more cost-effective and tailored crop insurance products to farmers, and that can reach them affordably and easily. And this has to be coupled with a lot of awareness and education, as you mentioned earlier, because this idea of having a way to mitigate the impacts of climate for most farmers is non-existent. Farmers, for them, weather is the kingmaker. If you're having good weather, you're going to have a good crop, you're going to have a good year. If the weather's not good, then you're going to have a bad year. And so they live and breathe the weather. And for them, in most cases, this is just an act of God that they don't really have control over. And so we need to invest a lot in educating growers that there are ways where you're not going to change the weather, but at least if something happens, you could protect your business and give it to them in a way that makes economic sense for their business. If it's too expensive, if it's not tailored, if the claims process is too long, if they end up getting pennies on the dollar, they're not going to go for it. And so I believe that this is a key focus that we should be advocating for and pushing for, especially in Africa.
Really, that's really great to hear the sort of your experience, interaction with the farmers. And of course, you're trying to help the farmers, but still the farmers may not see as opportunity, like you said, some new technologies, like you said, this is the kind of the, should be hands of the God, maybe they should not change the way they do, but it's also a matter of transition, perhaps, traditional way of agriculture, and then gradually shifting to more, modernized way, using like insurance, like you mentioned, or even some technology like varieties that you mentioned. And then, as you may know, the African Bank also introduced technology, technological transformation agriculture as a TAT, T-A-T. And then when we introduced drought resilient or heat tolerant wheat varieties in Ethiopia, initially it was very much challenging because the farmers didn't want to try the new varieties, right? Because they get used to the old varieties, they feel comfortable, they can estimate how much you get out of this, hectares and so forth. So we have done, a lot of research institutes, a demonstration pilot, the sites, and so that farmers can see physically how those new varieties can grow in spite of a temperature volatility and so forth. So it takes time, actually, in terms of education, awareness generation. So I'm happy that you're actually helping even education of the farmers, although as you mentioned, the data is a very much necessary kind of platform. So maybe across those investors, we have to also think about at the industrial level, perhaps, how we can actually aggregate and share the information to benefit the industry. Maybe linking with the commercial banks or financiers or insurance companies and so forth, so that we can perhaps use that kind of big data to analyze. And it's public goods, right? At the end of the day, many people can benefit out of this the data. So what do you think of when you invest in the funds? You have running two funds. I don't know which segment of the agriculture value chains you invest, but do you also invest in a more primary side or more value additional side? How do you actually address some of those key challenges, either related to the climate or either could be the data, lack of data challenges?
Yeah. So, from our equity fund, we do invest in integrated businesses, and we try to stay away from primary agriculture. And unfortunately, that's the case, right? Because these people, primary agriculture needs financing, but these are some of the risks that you've shared that exist, climate-related issues. And I'll give an example. So, we have an investment in integrated rice business in Nigeria, in southeastern Nigeria, and every single year, there's always a massive flooding event, and the farm is completely decimated. And over the course of the investment period, what we've done, and you realize when I say there's an implied cost, what we've done is we've tried to work with them to build like a 7.5-kilometer dike around the farm. Each dike is as wide, a car can drive over it. So you can imagine the amount of earth that has to be raised to protect the farm from the flooding from the river. And then, we also sequence planting such that by the time harvest season, the flood hits the farm, there is no crop on the farm. That happened for a while, but what we realized very quickly is that it was just while we were not losing money on the crops on the field, we were not gaining for example, we're losing 4 months not planting, and there were some implied costs. So what we decided was, what can we do to adapt to that change? And more recently last year, when that flooding event happened again, we realized it was a floodplain. So what we just did was we collected the flood water and we used that to irrigate about 8 hectares of rice farm. These are real problems, and the more we look at investing now, we pay attention to those things before we put money in a company. We want to know, where are you, what is the weather situation, what is the flooding situation, is there drought, that is specific to those investments. And that is also because while we are making investment for impact, there's a return expectation, which is why there is a type of finance that also should address that. If I'm building 7.5 kilometer dike around my farm, I shouldn't be financing with something that I expect a return in 2-3 years, right? I need something that is looking at 10 to 15 years timeline, so that also factors in that infrastructure piece into it. And I think those are some of the things we are beginning to think about on how can we incorporate that kind of financing into how we think about agriculture in Africa.
That's great, because you are kind of ahead of the curve. You're already integrating that anticipated sort of the volatility of the climate into your decision-making process of your agriculture investments. And of course, African Bank also trying to address to some extent. Of course, farmers can do so much, and then maybe private sector can do quite a lot, but public sector or even DFI can perhaps address some of those challenges. So in the form of a special agro-processing zone that we provide in Nigeria or elsewhere, we cover actually 13 countries by now. What we are trying to do is basically, like you said, sort of the flood channeling and system, or let's say, the infrastructure a bit more climate resilient in different ways. And it could be the drought. Of course, now you have sunlight. That means that you have generate renewable energy. It's a solar panel on top of it. So special agro-processing zones is usually that we provide a basic infrastructure, and the companies can actually use that basic infrastructure to invest, because from the, let's say, private equity perspective, you calculate, of course, return on investments, but if the company, your potential investing company, has already put that land or basic infrastructure in place, and that infrastructure is stable enough in the context of climate change, then perhaps as an investor, you may feel more comfortable, and then even calculation may change more positively. So we try to address a bit more infrastructure side, try to mobilize the private sector investments into the agriculture sector by providing agro-processing zones. So Aruto, as you already focus also in the social impact investment, and of course you have worked in so many different companies, and so you have a really good eyes to analyze perhaps the risks associated with the businesses. But when it comes to the social impact, how do you actually integrate into your decision-making process of the investments? Because of course, you as a social impact investment, you also try to make some sort of the returns, right? I want to understand your sort of risk and reward sort of measurements, in the agriculture space, so that we can also learn from you. In addition to the financial returns, how do you incorporate your potential social impact into your decision-making process?
Well, in agricultural companies, in agribusiness, for smallholder farmers, that's quite straightforward. Because, well, first of all, let me say that I completely agree with you. I would love to have insurance for smallholder farmers, but there are almost none. I completely agree. That's a shame, no? But for smallholder farmers, as someone mentioned, if you give them a good variety of seed instead of the seed they have been using generations after generations, 50 or 100, 200 years ago, no? If you give them a variety of seed adapted to the climate, to the current climate, and to that soil, if you go there and analyze the soil and you tell them, look, this soil, I will give you this variety, or I recommend you to plant this crop with this variety for your soil, no? I recommend you this fertilizer. I have a platform, a technological platform, and I will tell you where it's better for you to plant. Okay? And then I will tell you also when it's better to see about weeds, insects, and if you have a disease, then I will give you the product, the best product for you, either organic or inorganic, as you want, no? And then I will tell also to you where you harvest, and I will look for a buyer for your product, either national or international buyer. Also, I can, because I am a company, I can manage for you the organic certificate or the fair trade certificate, because a smallholder farmer can't manage that, no? So every one of these single steps will give a better return for the smallholder farmer and a better return for the company. So you are at the same time improving your profit and loss, and let's say the personal profit and loss of every farmer. So both things go together. It would be very difficult to get one without the other because it's the same business model, no?
Yeah, I agree with that, but I want to challenge you a little bit more because yes, it's ideal that you try, step by step, you educate and hand-holding support the farmers, but it's extensively costly, right? I mean, you need to have somebody, maybe partners on the ground, or even your investors may not agree to spend so much money into each one of the farmers. How do you manage your efficiency or your return? Even though I understand that theoretically speaking, to help farmer each step by step, to educate, help them to make them successful. How do you manage the efficiency?
As an investment fund, we invest in the companies that do that. So it's not us, it's the companies that have to have a business model, operations, field managers, aggregators, warehouses, and so on. So we invest in the agricultural companies that have all that in place, are making a profit out of that, and we go to the countryside, we do a social analysis, we talk with the farmers, we measure their income, their yield before and after, and then, if the company is making a profit and the farmer is improving their lives, then we will invest in that company. If you say, well, it's a great company, huge profit, we go to the farmers, we talk to them, and they have not improved especially, well, then we will not invest in that company. Or if we go to the farmers, it's great improvement for the farmers, but the company is making a loss, then we will not invest in that company. So we look for both sides. When there are both sides, then we will invest in that company.
Okay, now understood. So you actually do perhaps a very rigorous due diligence on the company level, so the company has efficiency to train the farmers and to integrate the business into their model. Yeah. Well, that's good. As long as those companies growing, perhaps we can also mobilize more resources and investments. But I want to hear from the panel member in terms of the let's say investment or capital mobilization. Let's say start from Hassan, former experience. You have gone through the journey, growing your company. But how did you see the access to the capital or access to the funding, either from commercial bank or private equity fund, or even including DFI or venture capital fund? What was your experience so far? Is it changing, or what are the kind of key advice that you can give to other, for example, entrepreneurs, perhaps in Africa, because we have so many interesting startups coming up, but they have quite a number of challenges, seems they are facing. So perhaps you can share your insight.
Yeah, So from an access to capital standpoint, it was, I mean, honestly, I don't know if we've had very good access to capital. We haven't really had much challenge with that. Funding is available. I think there's a lot of investors that are looking to tap into agriculture, and specifically in Africa. I think that the key is to have a product that delivers value to the growers, because, as I said, farmers are very realistic. They don't shy away from technology, and I just want to stress that point. Farmers absorb technology every single day, whether it be with new genetics, new biochemical products, new machinery, new equipment, new irrigation systems. They're always on the lookout for new technologies, and they are completely comfortable with that. So I think where a lot of players sometimes struggle is trying to sell a product that looks nice or sounds nice, but doesn't have a clear ROI for farmers. And this is the key to cracking the space. Agriculture, as the speaker before us was saying, is the largest industry in Africa. It's one of the largest industries in the world. It's the most defensive industry in the world, even regardless of what's happening, whether it be COVID, whether it be wars, people still need to eat. And so I think that it's a great industry to be investing in and to be pushing for its development and its growth and the prosperity of its players. But what's very important is to understand that it's a very grounded, realistic industry where you need to really crack a solid value proposition with a very clear return on investment for your customers. And if you do that, sky's the limit. And the other thing I would say is, I know that for most of the time, people are really, and this is a good thing, people want to help the smallholder farmer, and people want to get access to the smallholder farmer. The problem is it's incredibly difficult and it's incredibly expensive. And so our approach has been to start with the top of the pyramid. And by proving that with the largest players in the market, it starts trickling down to the rest of the market, and smaller farmers always try to imitate the larger farmers. And that's just the nature of how the industry goes. So we're kind of like flowing with the tide of the industry and how things naturally happen in the industry, rather than trying to go against it or try to resist it. And I think that this is also a very important thing to be cognizant of with regards to market entry strategies for whether it be investment funds or for companies trying to offer a new product or a new service into this industry.
The value proposition, and also I like that the farmer ROI is sort of your concept. Yeah, and actually they are very practical, even they actually calculate, right, the unit cost of the fertilizer, one bag, and how much does it cost, and then what's the incremental value gain, and then what's the market price of the maize and wheat or whatever, cassava and so forth. So it's really good to understand that the real sort of the value that you can provide to the farmers, that will determine your competitiveness, also capacity to mobilize the resources from your company perspective. So of course, the African Bank also invests in private equity funds, and we have about US dollar 900 million across maybe 65 to 70 funds and private equity funds plus debt funds. And for the special agro-processing zones, now we are reaching about 850 million across the 13 countries. We also mobilize 650 million co-financing the debt investors. So let's say about 1.5 billion now. But I think we have more and more demand is coming. And actually, we as an African bank cannot meet that demand. So we need to rely on the private sector, private equity funds, or those companies to mobilize more funding and then also execute your investment strategy. What is your plan in terms of capital mobilization? Are you deploying your capital, and then are you planning for starting another fund or expanding your second phase fund, or what's your plan for your investment in the coming years?
Yeah, thank you. So like I mentioned earlier, we started off with an equity fund, which AFDB is also invested in, and we fully deploy that now, and we are currently exiting some of the companies in our portfolio. But one of the things we realized when we're investing equity, which the ticket size was between 2 to 8.2 million, we realized very quickly that there's a missing middle, and these SMEs are they are not trained in the act of receiving financing, and they needed to learn how to do that, but they can't do that with equity most of the time. It's easier for them to understand what credit is about. So that's why we also now, the second fund, which is CEFA, which is a credit fund, which we are also now deploying. We're still fundraising for that, but we've already received a significant capital from an LP KFW in this instance, and we are deploying out of that. But the equity strategy, we still believe, is a major play, because even when you help these SMEs and they grow, the next thing is they need help with governance, and one of the things that they usually look out for is an equity investor that can help with that. And that's one of the things we pride ourselves in. So one of the things we're doing right now is we're raising a second equity fund, but right now we're expanding out of Nigeria. We're now expanding into the rest of West Africa with that equity fund. So where we are right now is that we are implementing multiple fund strategy to make sure that we can capture the different recipients or potential recipients of those funds in the market.
Okay, that's fantastic. I'm very impressed, because it's been quite a challenging years over the past years, as we have already seen. Of course, there are some commodity price increase and there are new market opportunities emerging. So of course, some clever investors and some companies tap into the opportunity. But on the other hand, because of supply chain and some of this, let's say, disruptions of the other logistics or other conflicts in other different countries, sometimes there are additional challenges. But I'm very happy to hear that actually you're expanding your equity strategy, expanding to the credit strategy. I'm very happy to, because not only the equity can address, I'm seeing that some of potential opportunities, companies also look for that debt as well. So I wanted to go back to, again, Aruto, your comment about the selection of the companies, and then you're executing your investment strategy. But how many millions you have invested? Sorry, the mic is not working, but I hope you could hear me. How much you deployed your capital into Africa, and what's your plan? Are you also interested in expanding your investments in the coming month or years, or you're watching and the agriculture sector in Africa? What is your plan for the next coming month from your investment strategy?
Well, now we set up the fund as an investment fund, not the investing vehicle we had before. Now the investment fund, we set it up in 2019, then COVID came, so it was a bit difficult to do anything. Now we have assets under management, we have 15 million euros. We are fully invested now in around 12 companies. Now we have a ticket of again 15 million euros by a development agency that will be matched by a private investors with 6 more million. So that's 22 million that will come in 2024. So we are planning to double the fund, double the assets under management next year in 2024. So we will increase our ticket in some companies we already have, and we are looking for more companies to invest in them.
Wow, that's great. That's really good news, because from even like a non-Africa investor perspective, that you already deployed the capital, which is really great, and of course valuation and maybe a bit of a challenge. I hope this microphone is working, or maybe I should use the other one. Thanks so much. Yeah, so going back to the climate finance, a bit of a topic, just to update you, of course, the African Bank is an accredited entity for Green Climate Fund, and we mobilize other, climate financing resources, for example, like a Global Environmental Fund, etc. And sometimes we blend some of those instruments into our investments, our portfolio companies, or some specific projects. So actually, I'm going to present one of my projects at the board meeting of the Green Climate Fund, and they actually organize a board meeting in Georgia. I don't know why, but they decided to that in the country. But anyway, we are trying to mobilize 100 million. Let's say, I hope they will approve, but let's see how it goes. We passed the technical committee. But what is your perspective? Now you also talked about, traditional money already. You talked about your pure private equity, commercial banks, and so forth. But what is your idea now? There's a landscape is also quite, changing, right? Especially the COP discussions. A lot of donors, other even foundations, and other investors looking for linkage with the climate finance. And then because they are also looking at Africa as a potential destination investments, but not only just for commercial achievement, but also helping addressing the global agenda like climate issue. Because adaptation is definitely the issue in Africa. And risk mitigation in the climate context is the issue. So it seems there is increasing awareness as well as sort of a market coming up, including of course the carbon finance and etc. But what is your idea? Do you have any plan to integrate that kind of resource or potential resource to leverage into your business strategy or investment strategy, Hassan?
Yeah, I mean, for us, we look at this as being a long-term horizon objective, because the immediate need is to build the data infrastructure to enable all of these services. Today, I don't think that anybody in the world has a proper database of farmers, crops, yields, all of this essential basic information that you could, for any other industry, probably find just with the click of a button, is almost non-existent for agriculture, and especially with smallholder farmers. And so, let alone the operational and field data, and augmenting that into a real-time data motion to allow for these products and services to be able to emerge. So we're investing currently in building out this data infrastructure, putting tools in the hands of growers that allows them to, first of all, identify who they are, and then be able to register what's happening in the field and keep track of their activities with value that's being delivered to them to reduce their cost and optimize their income. And then we believe that in the medium to long term, having this data at scale will allow for many of these solutions that we're talking about today to come to fruition. But we believe that we can't put the cart ahead of the horse and jump straight into offering these solutions without having the right data, because it's either going to be based on a broken business model, or it's not going to be very sustainable as a solution for people to rely on. So we're really invested in the horse right now, which is the data, and putting these digital tools in the hands of growers as cost efficiently and as cheaply as possible, so that and to start giving them the value they need and showing them the value of adopting these technologies. And based on that, once we have that success traction, large pools of data, then being able to offer these additional services and solutions down the line.
Great. Yeah, has been a great discussion. Of course, I want to continue more, but to deep dive some of the topics that you share. But I wanted to also invite, perhaps, if any audience, if you have a question, comment, I wanted to, give the floor. Otherwise, I have some other questions to ask the panelists. Please go ahead.
Thank you so much. Super informative. I did come in a little bit late, so my apologies if you've already covered this. But once you've successfully launched a business in the market, now with other types of businesses or business models, the scalability into different markets, you can see how that can be implemented. Now, when it comes specifically to agriculture, where there are nuances in each sort of environment or each culture, how do you see that scalability taking place? And do you have any references or examples of success in scaling into a different market or a different country?
I can try to pitch in. So what we said earlier is farmers are not alienated by technology. They actually consume technology on a daily basis, whether it be genetics, biochemical products, machinery, equipment, irrigation technologies, and so on. It takes a little bit longer at the beginning to prove out the technology and to really have a recognized ROI that farmers can agree on and see. And it's usually best to do this with large-scale players because at the beginning, they have the capacity to deploy these new technologies and to experiment with them. But once you've cracked it at that level, what we usually see is that the remainder of the pyramid starts following suit and starts adopting this technology, and all of a sudden it becomes a norm. Today, whether it be genetics, the varieties that are being grown today are completely different than what used to be grown 20, 30, 50 years ago. The machinery that's being used in farms today is completely different than the plow and the animals that were in the fields about 50 years ago, and so on. Irrigation systems, now you see pivot irrigation systems everywhere. You see drip irrigation, you see even more advanced irrigation technologies that are now become common use. And so the R&D cycle and proving the concept takes a bit longer at the beginning, but once it's done, it's a massive market that just starts adopting the technology and starts using it.
And if I can add to that, I think we also have to think of scale when it comes to ag tech in the ag space a bit differently from the way we think about scalability in other sectors like fintech. And the reason is very simple. I usually use the anecdote that how ag tech is like a dock. You might look at them very stable on the sea, but they are paddling like crazy, under the water. So the reality is that there's a lot of activity that still needs to happen, but there is a bare minimum which you can lift from one place to another, and then you customize a little bit. We've seen that a lot. We've brought in a lot of technology from India, from Europe, that we're adopting in Africa. Even things like seeds. You bring a seed, there are seeds that have been tested, grown in France, in Switzerland, in Germany. We bring them to Africa, we test them, and we realize that we are getting better yields than what we have. So that's a skill from there to here, without having to put in the 12 years development cost that would have gone into it if you want to do it in Africa. So there is skill, definitely different from when you look at other tech spaces, but there is definitely the scalability factor.
I'm happy to hear that there's some approaches available, perhaps to, like you said, of course, at the market to market we have to customize, but there's kind of a universal, or kind of there's some principles that apply and to multiply or scale up the businesses. So I wanted to get final word from each one of the members to wrap up, and I hope you could take some information or interesting discussions away from this session. But let's say of course the risk still exists. And which one you pick up from your investment perspective or from a business perspective? What is the most important risk that you also want to address in your business in the coming years? And how do you make it to the opportunity? As a final remark, maybe I can go from here, and just a small wrap-up statement addressing potential risk and also solution or opportunity that you want to share. Thank you.
I think for us, it's the implied cost, that comes with investing in the sector, and all these unforeseen climatic events. And so, for us, what we are paying more attention to is to be able to understand those implied risks and the cost or the opportunity cost or the lost revenue and then we can properly assign or allocate the right kind of capital to that investment. Yeah.
Interesting. Okay, matching the asset and of course liability or opportunity or risk versus type of the instruments. Correct. Okay, and Ruto?
Well, from our side, it's the risk in investing in sub-Saharan Africa, and that means technical assistance, that means blended finance, affairs, loss tranche. I mean, when you go to a potential investor to tell him or her, give me your money and I will invest it in sub-Saharan Africa, that's difficult for them. So I would welcome ways of making that easier for them.
Okay, structuring. Yeah, we want to also help from our perspective. Please, Hassan.
I mean, I tie our key risk with that of our customers, which is rising input costs and stagnant food prices. when farmers, when food prices increase, it's called inflation. But when input prices rise 80 to 200% in a year or two, nobody says anything. So the biggest risk is that a lot of farmers are actually going out of business and they will not survive. So we see controlling costs, reducing costs, but also allowing farmers more freedom and more access to markets to be able to capture as much value as possible as the biggest opportunity in agriculture today. And it's not just an opportunity, I think that it's a necessity really, because otherwise we're gonna have a lot of problem having dinner, so.
That's very true. But thank you so much. This is an exciting panel, and thank you so much for sharing your excellent experience and also the insight. And I'm very happy, especially that you identify some of the issues, and then actually you're already in the process of implementing your ideas. And so I'm happy to hear that you kindly share or generously share your insight. And I really want to collaborate each one of you and ahead of addressing or achieving the potential investments and also the climate finance mobilization. Thank you so much, all the members. Thank you so much for the audience for coming here.